And then we proceed. Class, we are going to look at the capital budgeting decision. This is a topic in the financial management. In fact, it's topic number 7. Tapatana nayo. And it is highly examinable. It is highly examinable. Topic number 7. Introduction to capital budgeting decision. What I want you to know is that all those investors that you hear of, you see, and those who you interact with, they need to know how they can undertake their projects. Maybe you can have project A, B, and C with certain cash flow. They come to you and ask you which project among the 3 projects, which project should I invest in? Which project should I invest in? The financial management concept give us some of the appraisal techniques, both traditional and current. Both traditional and current. So some of hello. Oh, sorry for that. What about now? I need to adjust it to my upper side. What about that? Is my sound okay now? Is my sound okay? Are you able to hear me? Why for yes? Thank you so much, John and Daisy. We're saying that we have some appraisal techniques, and these are the techniques that will help you to do what? These are the techniques that will help you to analyze a project and determine whether the project is worthwhile or not. You determine whether the project is profitable or not. You'll find a series of projects whereby, for example, you're given 3 projects, the cash flow of 3 projects. For the 3 projects, you'll find that, for example, if you're using the NPV to analyze this, you will find that, for example, the NPV of project A is 2, NPV of project B is 1, and NPV of project C is -5. Between the 3 projects, as a financial analyst, which project will you advise your investor to go for? Which project are you going to advise this investor to go for? Which project? The first one, we are having an NPV of 2. Second one, 1. And then the other one, we have a -5. Thank you so much, John. John is telling us that he's going to advise the investor to go for project A. That is correct. Okay. We also have a woman saying that project A and B. Good. Now that goes ahead to tell us that we should be having something called ranking. So depending on the amount of capital that you have, we can rank project A. We have a project here, and then we have NPV. So project A, we are told that NPV is 2. Project B, NPV is 1. And project C, NPV is -5. So in this case, if you were told, my sound tena imepotea. Sawa, need to change. What about now? I think I can see iko sawa, Josephine, probably hujaingia na sauti kwa your gadgets. I hope uingie na sauti. You can leave, tunaweza mwambia atoke meeting and then aingie na make sure amefinya aingie na sauti tafadhali. So in this case we're saying that when we are ranking, depending with the capital that we have, the initial investment that we have, if it cannot go ahead and maybe finance project B, we can say that this project A can be ranked number 1. And then project B, this is A. Project B can be ranked number 2, So if we have other additional capital or we find somebody to finance us, we can still go ahead and undertake project B, So this we shall be guided by the help of the appraisal technique. So we have said that we have two categories, traditional technique and we have modern technique. For the traditional techniques, we have payback period and we have the accounting rate of return. For the payback period, it is determined by the number of years we take to recoup our initial investment. How many years do we take to recoup? To recoup is to receive or to do what? To get what we had invested. If we had invested 24,000, we ask ourselves, after how long are we going to receive that 24,000? So having a variety of projects, determining if we receive that by within 1 year and the other one we receive within 2 years, we say that the better, the shorter the period of recouping or getting back our initial investment, and the shorter the period, the better the project. That is in regards to what? The payback period. Maybe we can have an example which will feature in the payback period. But before then, let me mention something. Under payback period, we can compute that where given the cash flow which are irregular, on the other hand, we can have cash flow which are regular. Cash flow which are irregular and cash flow which are irregular. What do I mean? For the cash flow which are regular, those are uniform cash flow. So you are having 5 years, yes? And each year we are having a cash flow of 2,000. So there is a way you compute what? You compute the payback period. On the other hand, we have irregular cash flow. I'm having cash flow which are different. They are not uniform in every year. We also have the formula to determine what? To determine the payback period. So we can start with the cash flow that does not have what? Similar cash flow. So you can say that illustration. So we can have illustration. Project A. So determine the payback period of project A with the following. Of project A where with 20,000 initial investment initial investment and the cash flow below. This is project A. So the cash flow for year 1 to 4, year 1, 2, 3, and 4. Year 1 to 4, oh, not visible. I'm going to adjust my board, no worries. For those who are joining us, you're looking at this capital budgeting decision. So the cash flow for year 1, I can have 2,000, 10,000, 15,000, and maybe 30,000. So allow me to adjust my board. 30,000. So we told to determine the payback period. We are told to determine the payback period. So in this case, for us to determine the payback period, it is as simple as this. We have the formula: payback period of irregular cash flow. These cash flow are not similar. If I look at year 1, year 2, year 3, year 4, the cash flow are not similar. So in that regard, we say that payback period is given by the full year, plus the remaining amount to recoup what? Our initial outlay, divide by what? The cash flow that has assisted us to get what? To get to our cash flow. So in this case, we can solve this. We can solve this question. Let me solve it here. We can solve it together. So we say that this is a year. Hope it's visible, not visible. I need to do it here. Year. Then we have cash flow, and then we have cumulative cash flow. So I have year 1, 2, 3, 4. What is my initial investment? What is my initial outlay? Somebody? Initial outlay? Can you check? Initial outlay is the same as initial investment. Please tell me, what is our initial investment in that case? Ningapi? 24,000. Where is it? 20,000. We had it somewhere. Yeah, it's this one. 20,000. So we want to recoup this. We want to see how many years are we going to have to recoup our initial outlay. And once we recoup our initial outlay, we disregard any other year beyond that. So in our case, I have 2,000 here. I have 10,000. I have 15,000. And I have what? 30,000. So I want somebody to tell me, when we are looking at cumulative, what do? We add, we bring together. So year 1, I'm having 2,000. That remains to be 2,000. Year 2, itakuwa ngapi? Somebody who have ever done these things, somebody who know about how to accumulate. 12,000. Yes, 10 plus 2. Itakuwa 12,000. I'm yet to get to my what? To my 20,000. I'm yet to get to my 20,000. I have to do what? I have to look at the next year, which is year 3, and see whether I'll get my initial outlay. I will recoup my initial outlay. If I add 15,000 to 12,000, what am I going to get? I'm going to get 27. That is beyond what? Beyond my initial outlay. And I wanted to recoup my initial outlay. So in that case, I usually advise student to put this 20 here. I wanted 20,000. I wanted 20,000. So hapa ndio nimepatia nini? 20 yangu. So the cash flow that has assisted me to arrive to my initial outlay is this 15,000, and that's what we call the cash flow. That is what we shall put here. So I want us to compute what is the remaining amount, what has been added to 12,000, what has been added for us to arrive to this. What has been added, and that is what we call the remaining amount. Ningapi. 8,000, that is our remaining amount. So for us to compute the payback period will be given by the full year. So can somebody tell me what is our full year here? Full year, the full year that we have recouped fully. 2, 1, 2. We can see up to this point those were full year. So I have 2 plus the remaining amount you have computed for me. You've told that it's 8,000. Divide by the cash flow that has assisted us to get this amount to get to our initial investment, which is 15,000. Now please, can you divide 8,000 divided by 15,000? What are you going to get? Tutapata nini pale? Haya, hapo tunataka unipatie hizi 03 zinaondoka. 8 divided by 15. You're almost there. Haya, use your phone. I know you don't have a calculator. I can as well use my calculator here. So that is 8 divided by 15. Are you getting 53 something, 0.53? So in my case here, I will be having 2.5 years. 2.5 years. That will be my payback period. So my payback period will be 2 years and 6 months. 2 years and 6 months. What does that tell us? That tells us that it will take us 2.5 years to achieve or to recoup our initial investment if we undertake this project A. If you undertake project A, it will take you 2.5 years. It will take you 2.5 years for you to recoup what? For you to recoup your initial investment. You have invested in project A, and your initial investment was 20,000, and these are the cash flow. Over the 4 years. These are the cash flow over the 4 years. It will take you 2.5 years for you to do what? To recoup what you had invested. Before we move forward, I'd like to know whether we are together up to that point. And for the new student, if you're using Zoom for the first time, we use Y for yes and N for no. Y for yes and N for no. Are we together up to that point? Are we together really? I'd like to know whether we are together. And that is for what? For irregular cash flow. These cash flow are not the same. And that's why we have done what? We have used this formula here. Full year plus the remaining amount divided by the cash flow for that period. Thank you and thank you so much. Why 6 years and not 2.5 years? It is 2 years and 6 months. An year has how many months? 12. An year, 2.5, this is the same. It's the same thing. 2.5 years. Yes, how? If another person state and say that it is 2 years and 6 months, so almost the same. It's the same. Are you together? Dolin, tuko pamoja. It is the same. Najua kuna wale watu wanaulizwa unataka 0.5 million ama million. Unataka 0.5 million ama 900,000. Wow, wewe ungechukua gani? Unataka 0.5 million ama 900,000. Kuna ile hali ya psychology. Ndio maana unakuta kwa duka zingine wanakuwekea wanakuwekea kitu ati inauzwa 999. My friend, hii kitu umeuziwa 1000. Ni vile tu hataki kuiweka 1000 in ile psychology. Sawa. I don't know whether you people you have enrolled to January April classes. Have you enrolled? Kuna mtu mwenye bado haja enroll? Is there anybody who has not enrolled for January April semester? Kuna mtu kweli? Kama huko niambie, so that we know where we can assist each other. And that is it. Tujue tutasaidiana namna gani. Kama huja manage kuenroll, tafadhali contact this number 719-525,000. Tutasaidika. Ukisikia iko busy, tafadhali contact this other number 83-555,000. That one you'll be assisted. Charges per unit is 4,800, but you can pay in 2 installments. Can pay in 2 installment. That is it. For the FM, we have early morning, FM and FR, early morning session, which runs from 5 a.m. to 7 a.m. Then evening session. So unaweza kuta ina run from 6 p.m. of course to 8 p.m. Unaweza kuta yenye ina run hapo na ingine ina run from 8 p.m. to what? To 10 p.m. So watu wa jioni sorted, watu wa asubuhi sorted. And this apply only to 2 units in the intermediate level, the financial management and financial reporting. Tunajua hizi ni heavy papers, and therefore we allow you to choose the favorite time for yourself, the time that suits you, the time that go with your schedule, Having said all that, is there any question? Breaking, sorry John, asante. Hii mic yangu ni kama inajitoa. Do we have any question? Sorry for that. Do we have any question? Swali lolote, I welcome maswali sasa. I welcome you teach what time? I teach in the morning. This one. Thank you for that question, Vicky. Asante. I teach in the morning, and like today morning tulikuwa na nini? Tulikuwa na FR. FR, niwapatie schedule ya asubuhi. FR ni siku ngapi? Tuesday and today is Thursday. Tuesday and, let me just use and, Thursday. Lakini sasa kuna vile huwa tuna have another class on a Saturday, lakini hiyo inaanza 5:30 Saturday, atuamuki mapema. And then FM hiyo inaenda Wednesday and Friday. In fact, kesho tuko nayo. Still we have another arrangement. So Saturday kuna vile inaingia hapa. Saturday tuna allege, tunaona kwamba to push FM ama to push FR, tuna push kabisa. Any other question as we end our session? In our next session, I'm going to introduce the modern method as we look at some of the appraisal and the modern methods. Some of them ni kama NPV, net present value, IRR, internal rate of return, and so on and so forth. Kuna swali lingine sasa as we wind it up. Otherwise nashukuru sana